Mike Sullivan. I'm a former IRS agent and teaching instructor with IRS. Welcome to my YouTube station. I have been doing this tax work for 51 years. I worked at IRS for 10. I'm a national expert in IRS resolution matters. I have a whole team of former agents. I've been on all the national news stations. Just look me up at 777irs.com. Learn about me that way. I don't need to go on about me. Just so you know, if you get audited by IRS and you're going to have a tax debt, what in fact is the next step? Well, that's a really good question. Someone about 2 weeks ago asked me, and I just got around to answering it, sorry. Usually, if you're going to owe money as a result of IRS taxes, you just go through the normal process that anybody else did. It's like filing a tax return and actually owing IRS tax debt. At the end of that day, that auditor, if it's an agreed case and you signed off on it and it's right, they send it into the service center like any other case, and it gets processed like any other case. So what happens from there? From there, you'll get a CP14 notice. 6 weeks later, you'll get a CP501 notice. 6 weeks later from there, you'll get a CP503 notice. 6 weeks later, by the way, everything runs on 6 week cycles or weeks, then you get the 504. That's what I call that dreaded 504 letter. That means IRS is setting it out certified, generally 90% of the time, and they're letting you know that next is, if you don't respond to them, is you're going to get levied, you're going to get a wage garnishment, you may have a federal tax lien. IRS can contact neighbors and do all this stuff and take 3 children if they want. Some people want to give up their kids, others don't. But anyway, at the end of the day, at that point in time, you're going to have to deal with that debt for sure. But usually you should kind of think about what you want to do, just so you know what the process is. IRS is in fact going to go ahead when they work your case. They're going to take a financial statement. It's the 433F. If it's at the service center, it's the 433A. If it's with a revenue officer, it's a large dollar case. At that point, when they take the financial statement, they're going to want to have documentation for it. Then when they do, IRS will look at that, and they'll either put you into currently non-collectible. It's a hardship, usually stays there a couple years. If penalties and interest do run, you get a payment agreement, or you can file an offer and compromise if in fact you're eligible for that. So if you don't owe a lot of money, you probably call IRS yourself. But if you owe a sizable debt, you don't want to do this yourself. You don't know what IRS is going to do with that financial statement. I am telling you, IRS is not going to be friendly. They're going to try to get every nickel out of you they can. And why is that? Let me tell you the reason. I just don't want to make that statement up. IRS has what's called a National Standardized Expense Program. What does that mean? Well, you're going to put your expenses. IRS says, not so fast. We're going to put in federal statistics put together by the Department of Labor for every county. So no matter what you put on that financial statement for expenses, IRS is going to put theirs down, and you usually wind up with a much higher payment agreement than you can possibly imagine. Anyway, if you need me, call me. You know where to find me. Go to my website at 777irs.com. Learn all about me. Thank you so much for listening. We are the real deal. I do appreciate subscriptions all the time. Thank you so very much.